Good. The market area Nordic. I mean, the focus areas for us going further here is, of course, to build on the mobile growth in Sweden and to continue with the 4G rollout, coupled actually with an increased focus on fixed or on fiber business to homes and to companies, which I will come back to. And in Norway, of course, it is to integrate Network Norway. Sweden is actually an amazing country. I mean, for the last year, we have had a mobile growth of about 10% if you include the installment or the handset sales, but the mid-single digit, as we call it, underlying growth. And it has been really good. We had a solid net sales last quarter with good intake and a EBITDA margin, which is actually sort of recovering in absolute terms and to some extent also in the margin, in the percentage margin. And we also bring a lot of cash to Lars Nilsson's treasure chest. Yes, sure, welcome. In order to what we will do with the cash, that is up to Lars. And some shareholders, maybe. Sorry. Of course, the shareholders. Of course. We have talked a lot about smartphones in the Nordic or the Swedish area actually, and smartphones is a really good thing. And you can sometimes ask, how good are they? And for Tele2, it's really good. Now, when we passed the last quarter, last month, we have an installed base of smartphones at about 40%, still increasing. And you have had also the numbers, which also Mats reflected earlier, that 80% of the sales right now is, or more than 80%, is smartphones. The interesting thing is actually the people that chooses a smartphone today are already high ARPU users, high ASPU users towards us. But even so, they show a good uplift in their spending towards us. And of course, the future potential for us is when the rest comes along. In a couple of years, we believe that almost everyone will buy a smartphone and most of the people will shift. And of course, when a feature phone enters and buy a smartphone, they will of course give us more revenue, mainly driven by higher fixed fees on data packages. So there's a huge potential for us, and it suits our customer segment portfolio, you can say. What has also happened during the last year is that we have seen an entry of low-end phones or less expensive phones, especially Huawei and ZTE, and they have taken a share of the market from the mid segment in smartphones. So the high-end segment with iPhone and Galaxy are still there, and they are still the most popular ones. But the ones in the mid-range, like Sony Ericsson and HTC and others, have sort of seen their market shares cut a bit from the low-end phones, which is interesting, which is also suits us very well, getting on lower-end phones. What is happening also in the Swedish market is that we see a shift right now. And this is just to explain how that shift looks. We see a huge demand for data and for handsets and tablets. We see also huge demand for high-speed data at home or in the offices. We see a decrease actually in the growth in mobile broadband, the classic mobile broadband with the modem for 3G. So the handset data is increasing. There's still a growth in the modem business, but it's changing towards handset, and it's also changing towards an increased demand for high-speed data at home. And it's a quite interesting development. And right now, this market, from my point of view, is quite the 3G modem market is sort of in an irrational phase right now. So we'll see what happens further on. But that's how the market develops right now. This is also, of course, for us, it's much better to we see a very nice, attractive relationship between pricing and usage on handset data. And therefore also that's more attractive for us, of course. And we see a strong handset data potential, as it was in before, on people using handset data. And we see a small decline a decline. There's still a growth. I mean, there's still 50% growth if you compare year on year on the mobile broadband data. But the growth is decreasing. When 4G mobile comes in, 4G mobile broadband, then that is sort of the true substitute to DSL connection at home. And we also see that when these modems come on, people can actually start to substitute their home connection or their home DSL connection to 4G mobile broadband. I myself live just a blocks from here, and I have like between 50 and 60 megabits per second in my home, and it's of course with a very short latency, and then the DSL connection feels very slow. So it's really good. As I was into, we continue our 4G rollout. We do this together with Net for Mobility, as you know. We're switching the 2G network and building the 4G network. We have these routers coming in late now. It's actually already in the market. This one, the home router for 4G. It's a really good one. And they will come more of those later on the fall. We also actually are testing handsets right now to see the 4G handsets. They will come, I should say, directly after Christmas. We will see handsets coming in. Samsung released something yesterday when they will launch 4G handsets. And if the 4G handsets come, we will, of course, be there and sell the 4G handsets. So it's a lot of things happens in 4G. We now we have 14 cities, we have 4G, but we aim is, of course, by end 2012 to cover 99% with 4G of the population. Along this network that we're building, since we're actually building not a new core network, of course, but we're building a new network with the 4G, we're also on a case-by-case, or where it's wise for us to build fiber to homes and to corporates. We are doing that on a case-by-case basis. And we're also leveraging actually on our cable network, since you all know that we have a cable network in Sweden built on coaxial cable. We are using that actually more as a door opener in order to be able to transform the coaxial network to a fiber network, due to the fact that we see an increased demand for high-speed data at home. And but that is done on a case-by-case basis. We have a complete offering also, as you can see, with TV, broadband, and telephony on that as a triple play offering. Very good price. Now, when we talk about the JVs or the model of JVs, since you know we like network sharing a lot. We think it's a really good model because it saves a lot of cash and it gives a long-term profit for us. I just made a conceptual picture of how we can look upon it. I mean, when you build a network in a JV, you have two customer bases that need to fit in that network. So you need to build a little bit more than you should if you would build it totally on your own. But it's not so much more you need to build. So if we were to build this same network, we would build about 90% of the capacity, but now we build 100 in order to fit the two customer bases. But on this one, we split the CapEx and OpEx, of course, so the saving for us, of course, is the saving we have if we were to build it ourselves. If you look at the EBIT saving calculated now from the Net for Mobility, we have about 300 million on the coming years here, which we save on EBIT by doing this. As you know, which we have talked about before, this to some extent hurts the percentage margin right now, since we take a lot of depreciation and financial costs above EBITDA level. So it sort of cuts down the EBITDA level on percentage margin. But long term, this is a very good model, and we like it a lot. Did you understand this picture? I think it's quite good to explain actually how this works. You don't need to build a complete double network, and that's the interesting thing. So you save a lot by doing this. The capex, of course, we save is also a lot, but that in these significant numbers. But maybe I should, due to respect of my colleagues at Stureplan, maybe I should not disclose that because they're building their network their own. But we save a lot on capex, of course. This is often put question in Sweden: what is happening with the Swedish mobile EBITDA? And this is, of course, the apart from revenue, this is my favorite KPI as well. We are doing very good in Sweden, but we can do better. We can actually even more cost-efficient operate and will break the trend. And we see a trend break in absolute terms, and we will, going further on, also see a trend break in the percentage margin. But this is, of course, a balance between we also want to take part of the growth just going on right now in Sweden. And of course, there's a balance, of course, how much of the growth you can take compared to have a decent